Here are the 6 reasons that 2025 is the biggest year yet for small business acquisition. Number one, silver tsunami. I can't hear that word again. It's everywhere and it's redundant. It's been done. We all know about it, but it's still worth hesitating over and thinking about because I have sellers who are in their 90s. I have sellers who are in their 80s. I have sellers who are in their 70s who all thought that they could do what their generations before them did and sell their business to the generation right below them. And that isn't working because there's a lot of them. So there are fewer of the next generation, but also that generation is not interested in working until they're 90. So from about really 60 and up, sometimes 55 and up, people are not interested in certainly acquiring. They're looking to divest, stabilize, and sell themselves. So you have all of the baby boomers selling to the next generation and all of those people not wanting it and trying to sell to the subsequent generations. So there's an enormous divide too between the buyer age and the seller age a lot of times. So silver tsunamis here. It is not slowing down yet. Millennials. This is number two. Millennials and Gen Xers want lifestyle and autonomy, right? They're not into the corner office. They're not into the pie eating contest where the prize is more pie. They want to have a little self-employment and they want to build their own thing. They don't want to be governed by other people's rules. It's part of their whole culture. They ask a lot of questions. They're more critical of authority. So there's a lot there and they're more inclined towards self-employment than, the partnership track. And the other reason is startup bubble has popped. I'm Sara Sharp. I'm a deal attorney who helps people buy and sell businesses every day. I have started out at practicing law about 13 years ago, and I represented a lot of startups over the years. Tech startups were huge in the 2010s. Everybody was going to be the Uber for whatever, the new Facebook, right? And everybody was going to go to the moon. There were a ton of venture capitalists interested in just basically investing in an idea. The concept of accelerators sprung up where people would go, young people usually, in person and live in this community where their idea was nurtured and they were given access to investors and board members and advisors. And they were taught all of these things to try to get their SaaS or their tech idea to the next level. And there were Series A, Series B, Series C, right? And a lot of those companies, that sometimes the same ones I represented at the beginning, they've dissolved. It didn't work out. They didn't catch their moment. Now, a lot of them did catch a moment that looked really good in the headlines, I will say. And I think any other lawyer who does this has had this experience. When you actually know the terms of the thing that hit the headlines, it's usually not as exciting for the startup founder as it seems. So that big merger might have been really nothing more than selling the email list and a couple assets to somebody for a couple grand to save face. But it still would make the news. There were a lot of people chasing these, ideal 1 in a million outcomes and that they saw in the news. And some of those weren't even real. So people know that now. Startup bubble has burst. Number four, search fund, right? Searchers and entrepreneur through acquisition has slid in to fill the gap on those folks who maybe if they were in their position they are now, 10 years ago, they would have been all about the tech startup. But now people don't really have the stomach for tech startup, state of the economy we're in. So they want hedged downside. And entrepreneurship through acquisition is incredibly appealing because you're basically buying a cash flowing asset that will support you while you continue, entrepreneurial journey almost immediately. So the downside risk is much more limited. Now the upside is pretty limited too, compared to going to the moon with a Facebook or an Uber or whatever. But I think the generation of entrepreneurial people that we have right now are not as doe-eyed or optimistic about being the 1 in a million to go to the moon. So for them, the capped downside is very appealing. So they can stretch their entrepreneurial muscles, implement everything that they learned in their MBA program, and also not take on the enormous risk that people did in the tech startup. So the fifth reason, interest rates. So interest rates have really colored the market in a couple different ways. But the way I'm talking about right now is people often don't trust the markets or they want to diversify their investment. So if you have a good job and you've got some margin and you're trying to be responsible, of course you invest in, index funds and things like that. But you also want to invest in something else that's not the same as an index fund because, that feels smart. And that's the rich dad, poor dad. And all of the advice is like, yes, do this, but also do other. Historically, that would have been real estate. Commercial real estate is like the next step for, people in their 30s who have a lot of additional income and are trying to make smart choices. But at the current interest rates, commercial and residential type of rental properties, they just very hard to get them to pencil. So getting it to pencil means there are very few deals to be made in real estate right now because you have such a high interest rate that the cost of holding the property, the amount you can rent it for hasn't lived up to that yet. So most deals are only, even if they are a deal, are barely profitable. They're not at the level where it's a slam dunk. And there's risk there, right? So you have to have a lot of capital. You have to take on pretty big debt. And the rental rates are just not there to have enough margin to make it seem comfortable. So people look elsewhere. A lot of those people turn to crypto. Crypto was really exciting because it was for $1. You could take $1, the barrier to entry was so low. You can buy a smallest fraction of a Bitcoin and know that you have something that is an asset that is different than the market. But over the last couple of years, the crypto investment landscape has basically become so regulated that it now is in lockstep with the stock market. So yeah, it's a little bit different, but if the US stock market is up, crypto is up. If it's down, crypto is down. So it's really trading and starting to feel a lot more like a different form of stock. And it's not really scratching that itch. So turn to business. Buy a business. Why not? If you can't buy a rental property, crypto seems silly. You've already invested in the stock market, which is like very stressful to do in current economic times in 2025. Then why not invest in something that you have more control over than any of those things, which is a business? So a lot of people are coming to the scene as an investor who is just interested in it as an economic play. And the final reason, essentially, live like an entrepreneur or a self-employed person. A lot of folks got a taste of that during the pandemic and they started working from home and getting to kind of control more pieces of their schedule. And then they got forced back into the office, or there's threats of being forced back into the office. And that's just not appealing. Generally speaking, people aren't really company people like they used to be. A lot of folks will move around every year, year and a half from company to company. And that can be really exhausting. So if you're doing that, it's a very natural thing to say, well, maybe I should seek self-employment. Maybe I should control my own destiny in this way. But especially if you got booted out because of layoff during the pandemic, or you electively said, no thanks, I like my life where I get to hang out with my dog all day, and I'm not interested in having to go into your office so that you can delight and awe me with once a week bagel delivery. If that's your thing, then buying a business is a genius way. You could start your own business, sure, but you're already in your prime. You might as well buy one so it's cash flowing on day one, right? And they're not that different, starting a business versus buying a business to build. Because if you start a business, you're basically taking a loan from yourself. Sometimes you're literally getting a loan to live on while you don't have enough money coming in. It's a timing issue. When you buy a business, you've got a loan to buy the business, but you've got money coming in automatically. So depending on the numbers, they can be very similar. So that's why you have so many more sellers than ever and so many more buyers than ever, just teeing up this like absolute tons and tons of smaller than ever business transactions that are raining down on us in 2025. Hope that's helpful. If you found this interesting, please check out dealacademy.org so you can become the expert on buying and selling businesses. And sign up for our newsletter if you want to hear about market trends, or subscribe to this channel so you can keep in the loop.